Welcome to the Edge Market Update for August 18th, and we had a nice reaction today in price as corn closed at $5.93, but we started the week with a fake breakdown. We were in the support box and we lost $4.81 prior support from the July low and closed at about $4.75 on Tuesday, Wednesday and Thursday we climbed back into this price support zone and we closed above the 9-day moving average and the top support level, which was resistance at 491. So technically that is considered a fake breakdown in the short term, and that is a bullish setup. Obviously, we would need some follow through in price next week, which my direct targets would be this previous 507 resistance formed on report day last Friday, and then obviously here at the 20-day moving average, which is currently $5.08. If we get above there, really the biggest spot we need to pay attention to in the longer intermediate term here is at 527 down to 525 level, where we have the 50-day moving average and also this declining trend line from the June high, the July divergent high, the lower high, and then this trend line here, which if price would break out above there, could be a very bullish setup in commodity prices. I did like the strength in corn this week with the risk off in different sectors like the equities. The oil market sold off quite a bit this week, correcting after surging higher, and precious metals did as well. So the fact that commodities put in a turn this week in the short term with other weakness in other markets was a bullish sign as well for me. Strength indicators were butting right up against this negative divergent line on the strength indicators. So if we could break out above here, that would be bullish. Otherwise, if we reject here, may need a little bit more time to consolidate before that breakout. Money flows also are turning up higher. They're turning towards a neutral level after being oversold for quite some time the past few weeks. And then long-term momentum is also still in a negative trend, but it is starting to curl higher here. We'll just have to break above that negative trend line to turn the long-term momentum back higher in this market. So definitely have some work to do yet. We'll say the average low in the grain marketing period the past 5 years is August 22nd, which would be next Tuesday. So potentially something to think about. We may start seeing a turn here, and maybe some more bullish fundamental news might be surfacing to bring prices higher. Definitely would not want to see this support zone fail again, though. Especially would not want to see a daily close below that 475 to 473 level on new crop corn. Moving on to new crop soybeans, we really had a strong finish to the week in new soybeans. We closed at $13.53 a bushel and got above the 20-day moving average actually here at the close on Friday. So that was a pretty bullish sign to end the week. We consolidated quite a bit here the past 5 or 6 trading days right along this 13.15 level, and also along the 50-day moving average, which now is support at 13.31. The 20-day moving average is now support at 13.43. I would say the next resistance would kind of be in this. There's a gap here that might get filled between around 1378 or so. Above there have pretty good resistance at 1391. So those would be my next targets if we do get some bullish headwinds. Ultimately, the high of this market is around that 1428 to 1435 level, where if we do happen to hit that sometime during harvest, it would be hard not to sell some new crop soybeans. But again, would not want to see 1331 or fail next week along with 1319 or this 1315 level. That would lead me to think that might be a fake breakout above this level here. Strength indicators in the long term, we still are negatively divergent. We're not touching this trend line yet. Would be bullish if we broke out above there. But in the very short term, we do have positive divergence on this strength indicator. So as long as that keeps holding into next week, that would be a bullish sign as well. money flows are actually in an overbought position where it makes sense to sell some grain. I don't like the fact that we're not back up to the crop insurance initial revenue guarantee yet of 1376. But just so you know, we are back here at a strong level on these short-term money flow indicators, and hopefully we can spend some time up here next week, and price will follow through with that. Keep moving upwards with the money flows as well. Long-term momentum, we crossed negatively in August. We're still in a positive spot. We're above the neutral line, but hopefully we can turn that back up and keep this market moving higher. So, but really a strong finish in the week for soybeans. Hopefully we get some more fundamental news. I know Brazil is probably getting close to running out of soybeans, so our export window is closer to opening up for the United States to foreign countries. And then also our domestic soybean demand is pretty good as crush margins are very strong. So that's been good. Corn export demand window should start opening up here in probably late November to December as Brazil runs out of corn. And China, it sounds like, should be short on a corn crop this year with all the flooding that they've experienced. So certainly a possibility we do get a strong bid for corn at some point. Just might have to hold on to it a little bit longer than soybeans. So with that being said, thank you for watching this week. If you have any questions, feel free to contact us anytime. Thank you for your business and have a great weekend.